Well, thank you for joining us. And what would you like to share about the CPI report, the economy, inflation? Should the Fed cut? The floor is yours.
Yeah, well, thank you. I mean, I will tell you one thing we talked about with the president was this idea that you weren't going to get inflation down as much as has occurred. You wouldn't get as much disinflation as we've seen without considerably higher unemployment. As you and Steve well know, many economists were arguing that that had to be the case, while in fact we've seen quite persistent disinflation in CPI core, headline, PCE, very much so, without giving up really much of anything on the unemployment rate. Now, look, from the president's perspective, he's happy to hear me talk about macroeconomics, but he really wants to know how is this sitting with families like the one he grew up in. So the important point, I think, for him and for working American families is that this combination of lower inflation while maintaining tight job markets is delivering real wage gains. We've seen that persistently. It's been a trend, not a blip. We saw it in this morning's data with real wages up about 1% year over year, higher than their pre-pandemic level.
The challenge, Jared, actually seems to lie, and this is kind of fascinating because you could see maybe some political rhetoric about it. I don't know. Number one category for inflation over the past year, car insurance up 20%, transportation inflation up 10%, car repair inflation up 7%, rent homeowners still in there. Are we going to see the president going after flow?
Well, he has been really emphatic that the most important two words when it comes to our economic agenda as we head into 24, lower costs. Certainly maintain the gains we've had, build on the progress, but continue to punch at some of those costs, some of which you mentioned, others of which have come down nicely. I mean, obviously, gas is critical, and, gas was north of $5 a gallon in June of 22. This morning, it was $3.08 a gallon, below $3 in 30 states. If you look at dairy, if you look at eggs, which, by the way, did tick up more avian flu in December, but they're down 25% over the past year. Dairy's down, milk, bread, airfares, TVs, used cars over the last year, although they ticked up again in December. So we need to continue putting downward pressure on costs, not just inflation, but costs. That also taps into his junk fee agenda. And also, look, if you're a corporation and your input costs are coming down because of the savings that we've seen, you need to pass those along to consumer. He'll continue to talk about that as well.
Steve?
But, Jared, you know the question I'm going to ask you, which is, wouldn't the president help his own case, his own cause, help the cause of American families if there was some dialing back in spending from the fiscal side? I know you guys have an ambitious agenda. It's an ambitious business agenda in terms of reshoring some production here in the United States, especially high tech, but also in terms of workers' wages. Doesn't that create some of the inflationary pressure that we're concerned about and that you really want to see dissipate?
Well, let me say two things about that. First of all, there is a very important double benefit in the space that you're talking about from lowering health care costs. These are actions that this president has legislated. Lowering the cost of insulin, lowering the cost of prescription drugs, lowering the cost of health care coverage. It's not an accident that something like 20 million people and counting joined the exchanges this year, and that helps lower their insurance costs. And that is a plus for the budget in the sense you mentioned, but it's also really important for family budgets. So both the fiscal budget and family budgets are helped when we lower health care costs. Now, look, what you're talking about is a little broader. And look, I think if you look at measures of fiscal impulse, look at the Brookings measure, for example, fiscal impulse has been, flat, negative. I don't think it's been particularly strong. So I do think that macroeconomically, at least, that's the key indicator there.